currencies like the dollars and the euros. If you have Bitcoin, should you be selling? Or if you don't, is now the opportunity to get in? Either way, after watching this video, I promise you will be wiser about whether Bitcoin lives up to its hype or not. I'm David Wu, a former Wall Street investment strategist with a 20-year track record of making actionable predictions about major global change. For whatever it's worth, I was the first Wall Street analyst to initiate coverage of Bitcoin now almost 10 years ago. Welcome to the Money Game, where I take on groupthink, propaganda, and conspiracy theories in my critical analysis of markets, economics, and politics. But before we begin, please hit subscribe and get notified when a new video comes out. Let's examine the four main reasons Bitcoin advocates tell us why we should own Bitcoin. 1, Bitcoin works within a transformative payment system. 2, Bitcoin is a hedge against inflation. 3, Bitcoin is out of reach of governments. And 4, Bitcoin is decentralized. There's no denying that Bitcoin is an ingenious idea. It combines an append-only database and existing technology with a protocol that offers incentive for verifying transactions securely, with a vision to create an alternative payment system that competes with the traditional payment system operated by banks. However, in the history of technology, the most important innovations are those that make our lives better. They make us more productive. They raise our standard of living. They pull people out of poverty. Think personal computers, think the internet, even washing machines. Is Bitcoin contributing to productivity gains in the world? The one obvious area in the global payment system where Bitcoin should be outcompeting the banks is in the processing of international remittances. Sending $100 to Mexico via Western Union could cost you as much as $10. Yet, having been around more than 10 years, Bitcoin accounts for only 1% of the $500 billion a year market. What about Bitcoin as a means for everyday payment? BitPay, the oldest and largest provider of Bitcoin payment services, processes every day just a tiny fraction of the transactions that Visa does. Does it matter that Bitcoin does not generate meaningful productivity gains? Yes, that is if you want to put a value on it. The price of any asset is the discounted value of any future cash flows, or its utility. Bitcoin itself doesn't produce anything, which means that it has no cash flow today, nor will it have any in the future. It has virtually no utility. You might say the same is true about gold. However, the difference is that more than 60% of gold production goes towards meeting jewelry and industrial demand. Gold has significant utility and it has a 9,000-year track record. So what do people see in Bitcoin that they're willing to pay so much for owning it? Over the past 2 years, Bitcoin advocates have been touting Bitcoin as an inflation hedge. Not only has Bitcoin failed to live up to its billing, it has been lately going down as inflation accelerates and inflation fears intensify. To be fair, Bitcoin is not the only inflation hedge that has disappointed. Gold, Swiss franc, and even the inflation index bonds have declined this year. However, Bitcoin has been by far the worst performing among them. For the record, in a previous video I released on February 9th, I explained why Bitcoin advocates are wrong to think that Bitcoin offers a safe haven against inflation. That's because a well-kept secret on Wall Street is that inflation hedges do well against inflation only under one strict condition. That is only if central banks view inflation as a good thing. If central banks stop viewing inflation as a good thing and begin to take actions to snuff it out, then inflation hedges can lose their shine very quickly, as we are seeing right now. One thing that gold, Swiss franc, and Bitcoin have in common is that they pay no interest. So when central banks raise interest rates, the opportunity cost of holding these assets goes up, making them less attractive. The claim by Bitcoin advocates that Bitcoin is an inflation hedge rests on the fact that Bitcoin supply is limited to only 21 million by design. But is it really true that Bitcoin has a limited supply? To answer that question, I asked Bob Seaman, a cybersecurity expert and the author of The Coin Man, a book that takes you on a journey to the darker side of the crypto world.
Thanks, David. The Bitcoin code is open source. You can copy it and create your own crypto. More crypto is being created all the time. The major competitor, Ether, on the Ethereum network has no limit. The crypto exchanges are continually and instantly converting one into the other in high volumes. Yes, there's fundamental technical differences between Bitcoin and Ether, but the market considers them interchangeable. Bitcoin and Ether have an 80% correlation. Then there's forks such as Bitcoin Cash and Bitcoin Satoshi Vision. They double the number of crypto when created. The maximum number, 21 million, is simply a line in the code. When it's in the financial interest of those who have the effective power to change that line, they will.
Regardless of what we might think about Bitcoin as an investment, we can't deny that Bitcoin has captured the imagination of the public, from young to old, from rich to poor. Bitcoin's success comes from the fact that it has come to embody the zeitgeist of our time. So what is the spirit of our era that Bitcoin has become an expression of? It is not a coincidence that Bitcoin has thrived while confidence in governments has sagged. The approval ratings of heads of governments in major developed countries are near an all-time low. A recent Pew Research survey shows that only 20% of Americans trust the government to do the right thing. Bitcoin has played on two different expressions of this distrust. One, the fear of growing government intrusiveness. Two, the fear of higher taxes, confiscation, and money printing. Most of the public understands enough economics to know that the massive government spending over the past 20 years is not sustainable and has to be paid for one day. As much as these fears are justified, the supposition that Bitcoin is an answer to these concerns is misleading and wrong for two reasons. First, despite the perceived notion that Bitcoin is anonymous, it isn't. It is pseudo-anonymous like the old number Swiss bank account. Every Bitcoin transaction is recorded on the blockchain ledger. That makes it possible to trace any illicit funds to a pseudonym. The government has the power to require crypto exchanges and others to reveal the true identity of any participant. Earlier this year, $3.6 trillion of Bitcoin was seized from a Manhattan couple who were arrested and charged with money laundering in connection with a 2016 hack on the Hong Kong crypto exchange Bitfinex. It was the largest financial seizure in the Justice Department's history. Granted, it took a lot of government resources to trace Bitcoin when there is sophisticated laundering such as by cybercriminals. However, normal Bitcoin transactions have little or no real anonymity. Furthermore, laundering the Bitcoin in an amateur manner just flags your activity to the authorities. Second, governments can shut down Bitcoin tomorrow if they want to. I don't mean by confiscation. What I mean is that they can take away its oxygen by shutting down Bitcoin exchanges. Bitcoin cannot thrive without Bitcoin exchanges that allow you to convert your Bitcoins into dollars or euros and back. Exchanges are necessary because it is difficult to sell or buy a significant quantity of Bitcoin without them. Also, since it's not easy to buy things directly with Bitcoin, you need to convert them into dollars and euros in order to make payments. In other words, exchanges make it possible for you to spend your Bitcoins. Theoretically, you could still illegally use an exchange based in a foreign country that permits exchanges. However, legal roadblocks will make that very difficult, making the use of Bitcoin even harder. Importantly, people who operate foreign exchanges to circumvent laws might end up in jail in the US, which regularly occurs today with other foreign financial crime actors. While Bitcoin exists in the virtual world, people live in the real world. Without exchanges, you can still transfer Bitcoin from one account to another. That might be enough in a world of anarchy in which governments have been overthrown and total chaos reigns like in the Mad Max movie. What probability would you attach to a scenario that has rarely happened in 5,000 years of human history? Ever since human beings began to experiment with democracy, no arguments have fired more emotions than the centralization versus decentralization debate. The rise of the internet for a time made us think that the Jeffersonian decentralized democracy has won the day. However, cancel culture and the development of artificial intelligence-based surveillance technology that gives Orwellian repression a new meaning are turning the tide. The good news is that millennials and Generation Z are suspicious of authority of any kind and know of nothing else but social media. They crave for a decentralized world. This is why they have jumped on Bitcoin's bandwagon with zeal. The million-dollar question is whether Bitcoin is truly decentralized. Let's ask Bob Seaman what he thinks.
David, Bitcoin has simply replaced one set of intermediaries, the big financial institutions, with another set. 90% of the mining is performed by 10 organizations, 98% by 20. They take a transaction fee just like traditional intermediaries. Over 25%, likely 35% of the Bitcoin is owned by only 1,000 people. They can easily manipulate the market given that there is no regulation or disclosure. Almost all the exchanges are centralized. 5 exchanges have half the business. Many of the exchanges are owned by Bitcoin whales, the large owners. The exchanges also take a transaction fee. Stablecoins are a major driver and facilitator of the trading of Bitcoin and have centralized operators, as we have seen with the collapse of Terra. And the Lightning Network, which speeds up Bitcoin transactions, re-centralizes transactions.
Because Bitcoin trading is not regulated, Bitcoin and cryptocurrencies are prone to market manipulation. By market manipulations, I mean when somebody artificially affects the supply and demand of Bitcoin to cause prices to go up or down. Indeed, the Securities and Exchange Commission has cited market manipulation as a primary reason for rejecting the approval of spot Bitcoin ETFs. A type of manipulation often cited is pump and dump, which involves a group of people working together to artificially inflate the cryptocurrency's value. One incident that has the hallmark of market manipulation happened in July 2021. City AM, a London-based newspaper, published an article citing supposedly an Amazon insider who suggested Amazon was considering accepting Bitcoin as a means of payment. The story triggered a buying frenzy and drove up the prices of Bitcoin by 14% above the $40,000 basically level until Amazon denied the story. The victims of manipulation are mostly unaware retail investors who are sucked in for a ride. Manipulation is not always easy to prove, and this is probably why the Securities and Exchange Commission has just announced that it will double its staff responsible for protecting investors in cryptocurrency markets. The price pattern of Bitcoin over the past 2 months has manipulation written all over it. After peaking just shy of $70,000 in November last year, Bitcoin began to slide. After dropping to $35,000 in January, it staged a rally to $48,000 before the rally began to lose steam. By April 10, Bitcoin was back at the psychologically important level of $40,000. To a Wall Street trader, what happened afterwards would have looked remarkable. Because suddenly, Bitcoin volatility just collapsed and it started to trade in a tight range where it remains for the next 3 weeks. When the range finally broke, Bitcoin dropped sharply to 30,000, where again volatility collapsed and another tight range soon established. This lasted nearly 4 weeks before the range broke and another collapse followed. I worked in the foreign exchange market for the last 20 years, and this pattern looks to me a lot like currency interventions. Who would want to intervene to support Bitcoin? Perhaps someone or group of people who owns a lot of Bitcoin and stand to lose a fortune in the event of a Bitcoin collapse. Another observation that strengthens my suspicion is the fact that between May 12th and June 7th, Bitcoin closed nearer to its day high than its day low on 74% of the days. Another way of saying this is that on 74% of these days, Bitcoin closed near its day high, even though it was inside a tight range. If somebody was trying to prop up Bitcoin, this is exactly what they would do to manipulate the tape. If my suspicion of market manipulation turns out to be correct, what is important here is not that someone is trying to manipulate Bitcoin, but rather somebody can manipulate Bitcoin. If you're a retail investor who thinks that the Bitcoin market is a decentralized ecosystem of utopia, think again. So what is my bottom line? 1, Bitcoin is an ingenious conception, but it produces very little economic good. 2, Bitcoin is a vehicle for speculation and not an inflation hedge. 3, Bitcoin is unlikely to provide a safe haven against government tyranny. 4, not only Bitcoin is far from being a decentralized ecosystem, it is prone to market manipulation. Mark Twain said that all you need in this life is ignorance and confidence, and then success is sure. The success of Bitcoin so far is a lot of ignorance and a lot of confidence. I'm sure the collapse of Bitcoin over the past few months will make people less confident. Whether they will become less ignorant, too, I can only hope. If you got something out of this program, I would appreciate if you were to subscribe and hit like. If you want to learn more about my investment strategy, come visit us at davidwuunbound.com. Thank you for listening.